10 great ways to invest $1 million safely. If someone handed you $1 million today, do you know what you would do with the cash? Having $1 million may appear to be a great deal of cash. As indicated by Credit Suisse, there were 18.6 million millionaires in the United States in 2019. Discovering how to invest $1 million is an important inquiry for many individuals. In spite of the fact that the strategies will be different for everybody, there are numerous opportunities for investing $1 million. Welcome to Alpha Galore, the place for those in passionate pursuit of luxury and wealth. Smash the subscribe button now and hit the notification bell to be notified when new videos are released. You should consider these 3 questions before investing $1 million. 1. What exactly are my financial goals? You ought to consistently make an investment plan dependent on your own financial goals. In the event that you don't have a reasonable bearing or goal as a top priority, how would you actually hope to achieve it? Ask yourself what it is you are hoping to achieve financially. Your goal could be to put something aside for retirement, set up a college fund for your children, or produce month-to-month income through investments. Defining obviously characterized goals will assist you with choosing the most ideal approaches to invest $1 million. 2. What is my timeline? When you've defined a reasonable goal, the next stage is to create a timetable to accomplish that goal. Your time period is how long you plan on holding that investment. If your aim is to invest for retirement, you should look at long-term investment options, depending on your age. If there's a likelihood that you'll need access to your invested money within the next 5 years, a short-term investment strategy may work best. 3. What is my tolerance to risk? In the event that you can't stand to lose your investment, your risk tolerance would be considered on the low end. If, on the other hand, you would mostly be unaffected financially by losing your investment, your risk tolerance would be considered very high. Now let's take a look at the 10 great ways to invest $1 million safely. Number 1. Pay off all your debt. First things first, if you have any significant debt, you'll need to pay those off. You may also want to pay off the mortgage on your house. It's something to definitely consider. In any case, you should pay off any high-interest debt you have. Most of the investments options we will touch on will not come anywhere near beating the 15% plus interest you're paying for credit cards and personal loans. So get rid of those debts first so you can have a great financial base to launch your investments from. Number 2. Have a fully funded emergency fund. Before we start talking about investments, let's make sure you've got your financial base in order. A fully funded emergency fund of at least 6 months is your next step. For this, you'll want to put the money somewhere that it's liquid and insured. Look for an FDIC-insured savings account with a high yield. Some of the best options today are online only and include CIT Bank, Ally Bank, and Capital One 360. These online options pass their low overhead on to customers in the form of higher APY, which right now might even be out-earning inflation. Number 3. Max out your retirement savings first. With $1 million to invest, you can max out your retirement reserve funds vehicles first, and using these tax-advantaged accounts should be your priority each year. If you already have money going into a company 401k, consider a service like Bloom to make sure you're getting the most out of it. And if you don't already have an IRA, open one to use with some of the following investing options. Then max out those accounts before you direct money to your taxable accounts. Number 4. Investing in the stock market. Investing your money in the stock market can possibly produce respectable returns, particularly if you invest wisely. Be that as it may, the stock market can encounter both huge and small volatility and changes in value. While there is an opportunity to see large returns on your investment, it might be prone to see huge losses as well. If you choose to invest in the stock market, make sure you spread your money across various enterprises to diversify your portfolio and limit your risk on the downside. Number 5. Rental income from real estate. Another approach to invest $1 million is to buy real estate investment properties. On the off chance that you invest in the right markets, it's conceivable to yield as much as a 9% return on your investment yearly. Suppose you purchase 10 properties averaging $100,000 each, and then lease them for $1,000 a month. Your net returns would be like the private lenders, except you would need to account for closing costs of about $3,000 on every property. This would bring down your profit to $120,000 after 5 years. Nonetheless, if those homes increased in value by 3% yearly, you'd gain an extra $150,000 in value. Between the home equity and the cash flow, you could sell some of the homes to repay your loan and keep the rest of the homes for yourself. You'd own them free and clear with some leftover money in your pocket. Number 6. Invest in real estate investment trusts, REITs. Real estate trusts permit individuals to invest in real estate without really purchasing an investment property. Rather, investors may buy into bigger real estate projects and own equity in the project as a whole. This is an extraordinary method to get into real estate investing without forking over a huge amount of money. REITs can be an extraordinary choice for those simply beginning in real estate investing. In any case, ensure you're mindful that you'll have almost no influence over where the money is going, so it's basic to do your due diligence on the REIT that you invest your money in. Number 7. Lending your money for big returns. Another great way to be choosy and to get a potentially hefty return on your investment is with a peer-to-peer lending platform. Choices like Lending Club and Prosper are incredible for lending your money to individuals who need to consolidate debt, fix up their home, or whatever. When you invest in these platforms, you can create a portfolio of loans that you partially help fund, so that you can spread your risk across multiple loans quite easily. These platforms have historically been great for investors and could net you some serious returns. You could borrow the funds and then turn around and lend them to someone else for more. That's exactly what banks do. They borrow money from the Fed, mark it up about 3%, and lend it to individual borrowers like us. If you borrowed $1 million for 5 years at 6% interest and turned around to lend it to someone else at 9%, you'd earn $30,000 per year and over $150,000 during that 5-year period. The key here is to only lend it to someone you know will pay you back in full. And if they can't pay you back for whatever reason, you would have set up an agreement in the form of collateral that you could take instead. Property is the most common type of collateral. For safety, the collateral property should be worth as much or more than the loan, including potential sales costs. Number 8. Investing in business. You could likewise take that $1 million and invest it in an incredible business idea. On the off chance that all works out in a good way, you could double, triple, or even quadruple your investment. However, this is the riskiest venture out of the 3 since statistically, 50% of new business fail during the first 5 years. If you invest in a business and it fails, what kind of collateral would you have, if any? You can see why it's tough to get a business loan even if you have great credit and a fantastic business idea. If the business fails, you're stuck with $1 million debt and no real collateral with which to pay it back. That's why you need to be very careful when friends or family come to you asking for your financial support in their business idea. If there's no collateral, you need to treat your investment like venture capital, assuming there's a 50% chance you'll get your money back. Number 9. ETFs. Exchange-traded funds allow investors to purchase a number of different stocks instead of stocks tied to just one company. ETFs provide portfolio diversification and help minimize risk. If you invest in a variety of sectors, you'll be less impacted when one market drops. You can take advantage of growing markets in one sector and offset losses in other sectors. There is also the option to invest in REIT ETFs. So instead of investing most or all of your money into one property, investors may buy stock in multiple real estate projects via ETFs. Number 10. Bonds. A safer investment option is U.S. government bonds because they're backed by the government. Returns are usually pretty limited, yielding around 3%. Investing a small amount of money in bonds is great for safe investing and diversifying your portfolio, but understand that the returns are going to be significantly lower than real estate. Note of caution. There are many ways to make money with money. Never jump into any investment that you don't understand. Never invest your money with someone who has not succeeded in that particular investment strategy over and over again. While private lending and rental property can be highly lucrative, they can also become money pits. For example, if you invest in high-crime zones, in decaying cities lacking job growth, or in property that has deferred maintenance issues, it is very important that you get educated on any investment you wish to pursue, or get mentored by someone who has repeatedly done what you are trying to do successfully. If you enjoyed this video, smash the like button now, and subscribe to our channel to make sure you don't miss another video.